program. I'm talking shares with Dow Gillam from Wealth Within and also Russell Muldoon from Montgomery Investment Management. So if you've got a question you'd like answered, our phone lines are open and the number is 1300 30 34 35, or you can also email yourmoney@skynews.com.au. And we've got Abe on the line from Sydney. Abe, welcome. How are you doing today?
Thank you for taking my call, Julia. I've got a question about GXY, Galaxy Resources. They're into lithium, and they're merging with a Canadian company, and the combined entity is going to be worth about 500 million. I just wondered what the panel think of that, and also a general question to Russell. If he thinks that the market is worth 4,100, would he be a seller at anything above that? And does he think that BHP, the current prices, already factor in a drop in the commodity or not?
Very good questions coming through. I want to come back to Abe's second question on your valuation of 4,100 and how that's derived. Russell?
Sure. So when I talk about the valuation of 4,100, I'm talking about the ASX 200. I think our range is around 4,000 to 4,100, and it has been there for around 2 to 3 months, so it's not something that I've just come up with recently. Do I think that the market is due for a sell-off? Look, if I knew that, I would be the richest man in the world. If I knew there was a sell-off coming in the market, I would be short. But to answer your question, no, I don't know that if there's a sell-off coming in the market. It's just what we think the market is worth. So we take 200 companies, the top 200 companies, we produce valuations for them. We combine all those valuations together, and we get a consolidated value of what we think it's worth, and we compare that to the market. And that's just where we are. So do I think that BHP's declining share price is taken into account in that valuation? Yes, I do. So look at 4,300. Perhaps, I think my valuation for BHP is around $31, $32. The market's around 34, 35. Will it get to 31, 32? Maybe I can't answer that, but there potentially is downside according to my valuation.
And I guess in terms of BHPs, let's go to our next caller. I've got Joe on the line from Sydney. Joe, welcome. What's your question tonight?
Yeah, good evening, Julia. Good evening, gentlemen. Just your thoughts on two companies, please. One of them is Lonrho Mining, LOM, and the other one's MEO Australia, which is the code is MEO.
Okay.
Wondering your thoughts on them. I bought them at I bought LOM at 1.5 cents and MEO at 35 cents. Wondering if hold on to them or count my losses. Thank you.
Okay, let's start off with LOM, and we might try to bring up the stock price for that one. Lonrho Mining, now this is, I believe, a diamond mining company in South Africa. We might go to Russell for this one first.
I just wanted to rule myself out of this question. I'm sorry about that, Joe, but these two companies are definitely more at the more speculative end. They don't have any earnings, so they're completely off our radar. I don't know anything. I don't have really anything to offer.
Let's go to our next caller. I've got Andrew on the line from Newcastle. Andrew, what's your question for our panel tonight?
Good evening, Julia. Just looking at integrated research, stock code IRI. Let's look at fundamentals and technicals and try to look at an entry point if the panel likes that particular stock.
Sure. So, I mean, this one's got quite a healthy dividend yield, 6.8% for RII, integrated research. I think it is in the IT space. They look at software. Russell, in terms of this one, nice healthy dividend, PE ratio around 12. Would you be buying it?
I think they, you're right, they are in the software IT space. They have a product, I believe, called Prognosis from memory. I've looked at them a few years ago, but I haven't been back there since. Look, one thing that we look for in a company, in an investment opportunity, is a company today and potentially a company that can be double, triple, quadruple what it is today in 5, 10 years' time. I think from memory, when I looked at integrated research and their product suite and their software services, I didn't see a business that could be significantly bigger than what it was back then. Look, I may be wrong, but to give you an idea, in order for your valuations for a business to increase over time, it needs to be bigger, it needs to sell more, it needs to generate more revenue, more profits. My valuation in 2005 for integrated research was 40 cents. My valuation in 2011 was 39 cents. So in 6, 7 years, the valuation really hasn't gone anywhere. So that's not attractive for us. We want a business that's increasing its valuation over time. So it's just not a business on our radar.
Okay, so thanks for joining us. Joining me in the studio tonight, I have Dow Gillam from Wealth Within and also Russell Muldoon from Montgomery Investment Management. So if you'd like to get in on the conversation, our phone lines are open and the number is 1300 30 34 35, or you can also email us at yourmoney@skynews.com.au. And we've got Barry on the line from Sydney. Barry, welcome. What's your question tonight?
Thanks very much. I was interested in Hawkley Oil and Gas, HOG.
Sure.
I've been looking at the chart of that, and it seems to have bottomed and then picked up nicely, and I was just wondering what the two panel members tonight thought.
Sure, so having a look at Hawkley Oil and Gas, it's been an interesting ride for this company over the last 52 weeks. The stock's down 40%, but over the last 3 months we've seen it moving quite aggressively, and in fact over the last quarter we've seen the stock up by 36%, so looking pretty good there in terms of momentum. In terms of Hawkley Oil and Gas, I mean, do you like the oil and gas space? We saw Woodside Petroleum coming out with a bit of a delay in terms of its Browse project. Any companies that take your interest in this area, Russell?
Yeah, look, sorry, Barry. Hawkley is not a business that I follow. It's looking for oil and gas in Ukraine. I believe that it's had some success with its Sorishnika well, and it's doing another hole at the moment, and a lot rests on that, the success of that hole. They're drilling for oil, I believe, in that hole. An analyst brought it to my attention just recently. So in the oil and gas space, I find these businesses extremely hard to value and extremely hard to analyse. You just don't know. They may hit something, they may not hit something. It's really luck of the draw. So the way that we play this space, or the way that we invest in this space, is we look at the people that service. So for us, the way we get exposure is through DECMIL. We own quite a fair bit of DECMIL in the portfolio. It is servicing mainly oil and gas. So I talked about commodities. I wasn't that bullish on commodities before, but I am on the oil and gas space. I think there's huge investment to come over the next 5 to 10 years in Australia. So we're invested in DECMIL.
Okay, so this is a good way to play it. Maybe not the oil and gas companies, but the mining services companies. And Russell's saying he prefers DECMIL in this space to get exposure to the oil and gas area. We've got an email now here from Michelle, and Michelle from Sydney writes, I'd like to ask the panel what they think of Forge and Boart Longyear. I recently bought both of these stocks to add to my self-managed super fund, and they have had a small dip since then. What does the panel think about these two stocks for the medium term? And would it be a good time to add to these? So we've seen Forge as well as Boart Longyear talking about mining services, and these companies have had a little bit of a dip recently. I mean, is it something to be concerned about, Dow?
I'm trying to bring up the charts. I've forgotten what the codes were.
BLY for Boart Longyear.
Sorry.
So we might have a look at Boart first, because we do have the stock chart on the screen. But
it's looking quite good, isn't it? It's a nice looking stock at the moment, and I think it's probably got a little bit more to go. It's going to get some resistance around that $25, $26 mark. Sorry, I've got the wrong stock up.
We might go to Russell first for Boart Longyear. So looking at that mining services space, and you said you'd like DECMIL for the oil and gas exposure. What do you think of Boart as well as Forge Group?
Sure. So Boart we don't own in the portfolio, and there's a simple reason for that. Because of our view on that, we've actually never have owned Boart Longyear. Look, these sort of companies, these exploration, these drillers are really at the tip of the iceberg as in terms of capital expenditure. So when BHP, Rio are doing well, they're investing in finding new fields and finding new projects. These guys get a lot of their capital expenditure. All their drills are highly utilised. But in a downturn, a cyclical downturn in resources, you find that utilisation rates for drill rigs can disappear very, very quickly. And in that instance, these businesses go from a highly profitable business to a lowly profitable business, or even an unprofitable business in a short amount of time. So look, it's just not a space that we feel comfortable investing for our investors in the Montgomery Private Fund. Scaffold has a valuation at the moment of around the $3.80 to the $4.50 mark. So I think the shares are fully valued, and note those risks that I just talked about before. In terms of Forge, I mentioned that we're kind of a bit bearish on the commodity space. This is a company that we have been lightening in our portfolio. Look, and that the reason's twofold. A, because of the slowdown we're seeing in potential capex for the miners going forward, and B, because we've owned it since about $3 or $4, so up at $6.40, $6.50. It's been a significant contributor to our fund's performance, and it's overweight in our portfolio. So we're really trimming that back at the moment.
So So it's a positive. You're paring back because it's done so well, and now it's a larger weighting in terms of the stock. Let's go to our next caller. We've got Shane on the line from Darwin. Shane, welcome. What's your question tonight?
Oh, how you going? Thanks for taking my call. Listen, my question's about a company called Environmental Clean Technologies, codename ESI. I'm curious to hear what the panel has to say about this one.
Okay, so having a look at environmental clean technologies, and the stock price has absolutely gone through the roof. I think they're in the business of trying to commercialize technology relating to, I think it's coal and iron making technology that this company is involved in. And in terms of the fundamentals, it looks like, Russell, like the share price has just absolutely gone through the roof, up by more than 400% over the last 3 months on the back of a patent. There had been a third party that had been opposed to this patent. Now they're not opposed to it, so it looks like they are going to get the patent application through in April. I mean, technology company, how much does this mean to its business?
No, look, it can mean nothing. It can mean absolutely everything. It's not a business I know about, but look, if I was looking at this business and it had a very promising technology, and I've known a lot of businesses that had very promising technologies but have never done anything or gone anywhere. Look, I would want to know its potential market size. I would want to know what percentage of that market could they take. What is that market in terms of revenue? So what are they going to earn potentially in revenue? And then what margins could they earn from this technology? All questions you need to ask to be an investor in a business, and especially a speculative business like this. So look, I mean, shares on issue 15 million 10 years ago, now 895. So even if they start generating profits, you're going to be sharing with a lot of people. So just be aware of that. It's still very speculative in my mind.
It's a very good point by Russell, that even with these technology companies, it's all about commercialization and making a profit in the end. So some background homework might be needed there. It is time for a quick break, but before we start, it is time to start the stock watch. So Russell, what are you watching?
Okay, so a company that Roger and I have been talking about recently on the show is a company called Critical. The share code is CCP. We haven't talked about it for a while. Last time we spoke, it was around $5.50. It's gone up to $6. It's now back to $5.50. Look, nothing at all has changed in this business. We still think it's a wonderful company. The only thing that's changed is the share price and the recent pullback. Scaffold says it's worth around $6.50 to $7. So look, we think it's a company to watch for the next few months.
Welcome back to the program. Joining us in the studio tonight, we have Dow Gillen from Wealth Within, and also Russell Muldoon from Montgomery Investment Management. So if you'd like to get in on the conversation, give us a call. The number is 1300 30 34 35, or you can also email us at yourmoney@skynews.com.au. And we've got Ron on the line from Gladstone. Ron, welcome. What's your question tonight?
Yeah, hi Julia, hi panel. I'm interested in a stock. It's Green Cross, GXL. I was looking to buy the stock. It's a veterinary chain, and I was just wondering what the panel's view was on the stock.
Okay, so interesting company if you like animals. This company looks like it's involved in the business of veterinary clinics around Australia. Russell, what's your view on a company like this?
Unfortunately, Ron, look, it's not a company that I've looked at. A number of analysts have brought to my attention recently, and I guess that's because I'm looking at the share price here and I'm thinking, fantastic. And if you've owned it for a long time, congratulations, you've done very, very well. Just having a quick look on my system at the moment, I can see that the business has grown very, very heavily via acquisition. So proceeds are being reinvested back into the business. It's not an organic growth and you know, buying a building, putting in vets and growing organically. It's been acquiring existing businesses. So there's a lot of execution risk, I guess you could say, in that sort of model. So look, it's one that, you know, obviously the share price is telling you that the management is doing a very, very good job in what they're paying for these businesses. But just be careful, you know, when a business acquires very, very heavily and grows very, very quickly, that brings a lot of challenges for management. And you know, the jury, I guess, will be out over the next 10 to 15 years on this business and how they manage that growth.
Okay, so growth by acquisitions brings with it its own risks, but I guess some synergies are there as well. I'm just having a look at some support and resistance on the Bell Direct side. And the strange thing is support's down at 70 cents while resistance is at $2.10. So I guess in terms of risk reward, not too much potential there.
Interesting you say that, because my valuation is around 70, 80 cents. So that support makes a lot of sense.
So making a lot of sense there in terms of lining up with the fundamentals as well. Let's go to our next caller. We've got Martin on the line from Greenpoint. Martin, welcome. What's your question tonight?
Hello, Julia. Hello, gentlemen. Thanks for the show. I love it.
Hi.
Excellent.
I've got a question on two stocks,
Sure.
Saracen, SAR, and Bandana Energy, BND. Thank you.
So having a look at Saracen and Bandana, we might start off with Saracen first. SAR is the code, then we'll try and get the chart up there for you. Two very interesting companies. I mean, if we have a look at Saracen in the gold space, all the gold miners have basically been underperforming the gold price. We've seen the gold index, one of the most poorly performing areas in the last quarter. So is Saracen one that you'd support, and what do you think of gold in general, Russell? And the other is Bandana Resources. So looking at that very sexy area of the Bowen Basin where it seems to be the place to be, what do you think of Bandana Energy?
I don't think I've ever known a basin to be called sexy before, so there's always a first on this show.
Julia can say anything she likes.
But look, I don't know anything about Bandana, but I do know a little bit about Saracen. Look, you're definitely looking in the right spot. We only look for companies that are either producing or coming into production, that have cash flows, they're able to self-fund their development, their infrastructure spend. But another thing we also look for, or two things more importantly that we always look for, are a rising production and long mine lives. Now, I believe Saracen has a very, very short mine life. It has Carews Dam and also has Red October, I think. And both those mines are quite small. So look, mine life potential for Saracen is not there. But as an Australian miner in Australian gold, we have an investment in Silver Lake Resources. It's going from 100,000 ounces to 200,000 ounces to 250,000 ounces. Has a 10-year mine life. It has excellent management. So look, that's where we're invested in this space.
Okay, and looking at the charts for Bandana, I mean, this is, I think they have mostly, BND is the code there. I think it's mostly thermal coal in the Galilee as well as the Bowen Basins. And that's really where its valuation would be derived from. Very much a speculative. It'd be emerging coal producer probably in FY13. Let's go to an email now. We've got one here from Stephen who asks, I've got shares in Oz Minerals. Do you suggest I keep or sell them, and at what price if I sell? So having a look at Oz Minerals, and I mean, copper prices have been under a fair bit of pressure. I guess the job numbers coming out of the US on Friday certainly not helping. And then the numbers coming out of China as well, where we've seen some weakness in exports, strength in imports, actually the other way around, weakness in imports, strength in exports, and inflation a bit hotter than what the market was expecting. So Russell, having a look at a company like Oz Minerals, I mean, do you like this space?
I think it comes back to what we spoke about at the start of the show, and you know, we're just not a big fan on the commodity space at the moment, unfortunately. Look, we have a valuation on Oz Minerals of around the $5 level.
Ooh.
So where is it trading now? Around $9.60. I'm not sure where it finished today. This is yesterday's price. So look, copper, iron ore, zinc, you know, they're really out of my comfort zone and out of my ability as an investor, simply because you just don't know where they're going to be in 5-10 years time. We just prefer to invest in industrial companies where we know what the future growth for that business is. So look, trading at $9.60, valuation at $5, it looks quite risky here.
Okay, so Russell doesn't like the commodity space at the moment, preferring industrial companies.